It's Rick. It's Tuesday, December the 13th. Start where we always do with my risk model and substantial improvement today with the 8-day and 21-day, 50-day moving average for the S&P all now trending up. We're still below the 200 is still in a downtrend on both the S&P and particularly the QQQs. But it doesn't really tell the whole story of what happened today. Well, just get this out of the way here. We opened this morning. I'm just going to spread this out a bit. We opened this morning above the 200-day moving average, a huge gap up. Obviously, some participants in the market were delighted by the consumer price data that was released 5:30 in the morning, our time, and the market was gapping up. I took advantage of that and actually sold a couple of things pre-market because I kind of felt that this was going to pull back, and sure enough it did, although I didn't expect to pull back to the extent that it did. So we opened up here and ended up not closing at the lows, but closing substantially below where we opened. It actually shows up better on a 5-minute chart, which I'll spread out here. So we opened up here, tried to rally again, and then just shit the bed all day long, and then sort of settled in the afternoon. So tomorrow is FOMC announcement on interest rates. So the market is kind of sitting and waiting to see what's going to happen there. So this is what I refer to as a gap and crap. So it gaps up and then craps out, as opposed to a gap and go, which we'd love to see, where it opens above and then just rockets higher all day long. So we obviously didn't get that today. So the Qs basically did the same thing. It was up about 1% for the day, but it started the day up 4%. Opened up here and then ended up just closing up 1%. And notice too, both on the S&P and the QQQ's volume was one of the bigger volume days, especially for a red candle. So obviously the institutions said, you know what, I'm glad that the retail frenzy's out there and they're going to buy a bunch of stuff, so we're going to sell it to them. And the institutions basically unloaded all day long. And so that's what we call a distribution day, which is not a good sign. So we'll see. Tomorrow's another big day with the Fed announcement. I mean, pretty much everybody's priced in a 50 point interest rate hike, but it could be a surprise. I still view this as mildly bullish. Notwithstanding today's action, I would love us to sort of mush around here for a little bit and then march higher and take out this 200-day moving average. It'll happen sooner on the SPY than it will on the Qs. See, we went above it today. So this is coming down. Price is coming up. They're going to meet. It's going to be tough sledding in here for some time, probably between now and the end of the year. And like I said before, there's incentive for the institution, the fund managers, to prop the market up to get their bonuses. But then come January, who knows? Like I've drawn this weekly chart. Mind all the squibbles on here, but you know, the three scenarios for next year is one that we just go straight up from here, or the one that we chop around, or we head back down. So we'll just play it as we see it next week. I have only three positions. They're all doing reasonably well, and a couple of them, one of them, well, all three are pretty good examples of kind of patterns that I'm looking for. The first is HWM. Let's move this around here, and I entered this 2 days ago on the break of this downtrend line break here, a quarter position, and then I added to it this morning. And what I want to point out on this chart, this is, it's not the greatest example because this move here, well, I'd like to, just go back. It moved from here to here and then retrace this whole move, but it was only a 20% move one way or the other. I would have rather this come from down below and then this retracement come off 40% previous rise, but nevertheless. So anyway, it comes down 20%. And this is like, I guess we use the metaphor of a wet towel, a soaking wet towel. So the stock comes up to the top up here, and as you start wringing the towel, wringing the moisture out of it, and the stock comes down. The next time it goes back up again, you unfold the towel, you rewrap it again, and you squeeze it some more. But this time, not near as much water comes out. So this decline here was 21%. This decline is only 11%. And then that repeats itself a third time. It comes up here, you get the towel for the third time, you fold it and you start squeezing again, and now it's really hard to get any juice out of it. And the stock only comes back 4%. And so what this is telling us that the supply is gradually being eaten up. And once we get above these highs, it should be clear sailing to go up. But it didn't quite happen today because of the general market weakness. Had this been obviously a stronger market, I would have expected this one to go up quite substantially. But anyway, nevertheless, I did add to my position right here around 39.20 or something like that. So what I would like to see this do, now that it's broken above here, I mean, it'd be fine if it keeps on rocketing up. That would be great. I have a half position, but I'd really like this to really settle in here, tighten up a bit, not go down too much, maybe down a little bit, and then rip out. And by that time, I would add to this and make it a full position, and this could be a really good trade. The protection on the downside, originally on my quarter position, my entry was here at 38.30, I think it was. And my stop was down here. I've now raised my stop to break even on the first half. And so if I get stopped out, I'll break even on that part, lose on this one. And my overall risk remains the same, but I now have twice as many shares. So I'm sort of using my profit on the first trade to finance the risk for the second. Second is CBC, and this is similar, not quite as clean. Comes up here, pulls back. The next pullback isn't as deep. Next pullback is shallower again. And then this pullback's about the same. I was really hoping that this one would tighten up in here for about 2 or 3 days. And so that I could squeeze a little bit more juice out of the lemon, if you like, and then have it rip up. But it ripped up today. So I'll take it. I have basically a half position here. So in this kind of a market, I'm loath to get my size too big because it's just not been a great market. But we'll see what happens with this. And then the third position I've sold a lot of it. Similar kind of thing, came down, this pullback a little shallower again. I entered here, this day here, at, can't remember exactly the entry price, 61.50, 61.57, I think is the entry price. I lightened up some yesterday because it was coming into this overhead supply here. When it gapped up this morning, I lightened up a couple more. So really now I only have a quarter position, but I banked a nice gain on this. And again, in a perfect world, we'll do something like this. It'll stick around here for a couple of days, and then rip out from there. And then that will be another chance to add back the shares that I've sold. And of course, my stop has been raised to my break-even point. So no matter what happens, I'm going to have a pretty good profit on this one. One other thing I wanted to point out today was Bank of Montreal. I'll call it a bailout, but it's really not a bailout. They just announced yesterday they're selling something like 3 million shares at $118, $118.60, I think it is, to beef up their capital structure. So to meet the new tier requirements or whatever. So this is not good. If you recall from a video about 2-3 weeks ago, I pointed out to the group that, this was to my way of thinking, this move here I think at the time was about 15% up. And to me, that was a gift, because this thing is way below the 200 moving average. And you should either take your gift or certainly place a stop loss. No more than 5. Don't let this go down any more than 5%. So I don't know if anybody did that. But from this peak now we're down 9%. And call me skeptical, but the underwriters for this offering, as I say, they priced it at 118.60. So that's where we could go. And also reading the prospectus, they got a 3.5% commission discount, whatever you want to call it, for participating. So if you subtract that from their cost is going to be somewhere down around $114. So the skeptic in me says, this big volume today, what they did is BMO Capital Markets and the other institutions that are taking this placement probably stuffed their clients' accounts with Bank of Montreal stock today at around $122, $123. And then they sold them their stock out of their own holdings, stuffed it in their clients' accounts. And of course, they're going to get to buy it back at 118.60 minus their discount. So they're going to be into this for they're going to pocket almost $10. So yeah, I'm very skeptical. I just think there's just more downside for this, as there is with some of the other banks as well. And my bet is that this is going to significantly underperform the overall market for some months ahead of us. So again, why would anybody be in this? If you follow my line of thinking, at least anyway, when it's been below its 200-day moving average and has been that way for a long time. It's just not viable. All bad things happen below here, and so it wouldn't surprise me a snick if this drops down to $114. So anyway, be warned. That's about all. Oh, there's one other little, more than a little trade. It was a very profitable trade. I think I'd mentioned, let's go back to the QQQ. I'd mentioned 3 or 4 days ago, last Thursday, last week, that these moving averages were bunching up. And there was a potential trade in here, short-term trade above this high with a stop below this low, like a really tight risk reward. So I went ahead and did that in the TQQQ, which is a triple leveraged. So basically, if the QQQs move 1%, this particular instrument moves 3%. So I got in here at $20.60. I had a 20-cent stop, so that's 1%, a 1% stop. And I took out some pre-market this morning. Overall, this gain, if I'd held it all, which I never do, my gain from my entry price to the peak, the max I would have got would be around 2060, around 15%. I actually I haven't closed out the trade. I still have about 15% of my original position, but I'm up about 9.8% on this one. So I don't know if anybody else took this. I kind of doubt that you did, but it's the kind of thing that doesn't happen very often. But if when you're paying attention, you can get trades like this where the risk reward is huge. You know, risk one and get back 8 or 9. Okay, that's it for today. Tomorrow should be another interesting day with the FOMC announcement. I'm still fairly light. I mean, 3 positions, all doing reasonably well, and I'm less than 40% invested, 60% cash. So like you, waiting it all out. There's just this kind of market action just says we're not in a good market yet. This kind of crap should not happen. But it has happened time and time again over the last 10, 12, 13 months. And so it just shows that we're just not ready to get invested in the market yet. So keep your powder dry. Okay, that's it. That's all. Cheers.